So risk management is really important, and I don't feel like I don't feel as though many people know exactly the importance and what exactly risk management is. So in any corporation, in any business, risk management is important, especially if you're dealing with trading, investing, businesses of that sort of nature, because business investing and trading is based on volatile markets and volatile prices. A lot of money could be lost in very short periods of time due to market volatility. So if you want to know about risk management, it's very important to know about risk management if you're involved, especially in any controlling manner with regards to any trading or investing ventures. So risk management is the ability to of course it's in the definition, it's kind of self-explanatory, the ability to manage risk. But what does that mean? So if you're in control, or you're managing £100, for example, worth of stocks in a company, and your job as a trader or an investor is to make more money, or to multiply that money, or to grow that money, grow that £100 of capital. The best, I guess, the best short term strategy would be to trade, as opposed to using value investing, which is more of a long term investing practice. So the best thing will be to trade based on market fluctuations. So you'd buy it low, and what low is we'll talk about in another video, because it's a whole separate talk on what is defined as a low value stock. But in the best way to explain it in a short period of time is a low valued, or not a low value stock, a cheap stock. It's about the best thing to do to make money in the short term with regards to stocks is to buy stocks cheap. So you look at the net present value and the net asset value. That's basically the intrinsic worth of the company, and you buy the stocks cheaper than that, and that way you have a margin of safety, because if you buy the stock and then the price decreases, which it inevitably will, because prices of stocks always go down. What you can do is you can always have that margin of safety, that you bought the stock at a cheaper value, a cheaper price than its intrinsic worth. So you always have that money, because at the end of the day, a business is not its market price, or its market. The market price is important, but a business is not its market price, but it's its it's its assets. It's its equity. It's not. A business is ultimately based on its equity, and equity is just assets minus liabilities, assets plus liabilities, and then you get total shareholders equity. But anyway, back to the short term. Managing risk management. Risk management is the ability, one of the most important aspects of any business, especially businesses based on investing and trading, especially. But almost all businesses, especially large businesses, deal with investing, because they purchase stocks in their own company. Sometimes when they do share buybacks, or when they buy stocks in other companies, for example, mergers and acquisitions, and just buying different subsidiaries, buying different business ventures to be able to expand themselves, research and development. These are all ventures that need to be need risk management applied to it. So you have to have a whole team, a whole sector, to be able to manage risk. So I mean, this can apply to personal life as well. Any venture that anybody or any group of individuals are gonna undertake, to be able to reach the goal, to be able to reach the goal that that one individual or a group of people set, to be able to reach the goal or goals, you need to be able to manage the risk. You need to be able to understand what are the chances of you failing, what are the chances of you succeeding. That's managing risk. So to conclude this video, managing risk is basically what I just explained. The ability to identify in the most specific terms, or to the best accuracy, what the chances are of an individual or group failing to reach the goal, or goals set by the individual or group, and what are the potential losses and potential gains. That all is involved in risk management.